Myriad Genetics stock surged 7%. But is this a buying opportunity or a red flag? Let's break down what's driving the recent momentum and what investors should watch for next. The NASDAQ-listed company, MYGN, hit an intraday high of $7.44 before closing at $7.38. With a trading volume that plummeted 85% compared to its 1.7 million average daily shares. While the price jump is eye-catching, the unusually low volume raises questions. Could this be a short-term bounce or a sign of waning institutional interest? And this is the part most people miss. The stock's 50-day moving average, $5.50, and 200-day average, $6.56, suggest a long-term upward trend, but the recent volatility might be testing investors' patience. Analysts are split on Myriad's future. Scotiabank recently cut its price target from $20 to $6, a staggering 70% drop. While Piper Sandler trimmed its estimate to $9 from $12.50. Yet others, like Fisher Asset Management, are doubling down, boosting their holdings by 20% in Q2 alone. The stock now carries a hold consensus with an average target of $12.45. But here's where it gets controversial. Why do some analysts see a $20 upside while others are slashing their projections? Is the company's pipeline of genetic tests, like BRCA CDX for cancer treatment decisions, truly undervalued? Or are market forces overcorrecting? We'd love to hear your take in the comments. Do you think the recent analyst downgrades signal a deeper problem, or is this a temporary dip? Big institutional players are also moving the needle. Vanguard Group added 76,712 shares in Q1, while Glenview Capital and Cube Research each increased their stakes by over 17% and 44% respectively, with 99% of Myriad stock owned by institutions. Retail investors might feel like they're playing catch-up. But here's the kicker. These heavyweights are betting on the company's core business, genetic diagnostics for hereditary cancers and precision medicine. For example, MyRisk hereditary cancer test helps identify genetic risks for breast, ovarian, and other cancers, a growing market as patients prioritize preventive care. Still, the numbers tell a mixed story. Myriad's market cap, $698.54 million, and negative PE ratio, negative 1.75, hint at unprofitability. Yet its beta of 1.93 shows it's twice as volatile as the SP 500. Is this volatility a risk or a chance to buy the dip? Market Beat's editorial team notes that the company isn't among the top 5 stocks their analysts are quietly recommending. Could this be a case of the market undervaluing Myriad's long-term potential? So where do we stand? The stock's recent gains might reflect optimism about its diagnostic tools, but the analysts' skepticism and low volume suggest caution. If you're considering an investment, ask yourself, does Myriad's focus on precision medicine align with your risk tolerance? And is the current valuation a bargain or a trap? We'll be watching how the company navigates these dynamics, and we'd love to hear your thoughts. Share your perspective below. Are you bullish or bearish on Myriad's future? Why?